Hi everyone and welcome back to my more important analysis videos on Wednesday the 6th of September with me, Richard Perry, market analyst at Hantec Markets. Going to look at dollar yen now, and this is a big one because it shows that the market has strengthened on the yen, weakened on the dollar, and it's now back below 109 figure. 109, sort of 108.11, that key April low to 109, has certainly been a level at which these sort of lows have come in. That's around that 109 figure area. It seems to be that certainly with the market closing below all those levels of August, it is really now putting pressure on the April low. And every time, pretty much in even in April, really, the market sort of closed below 109 figure, it bounced in on the next session and basically back above 109 figure. So if it continues to sort of trade below 109 figure and sort of close below 109 figure, that is really putting the pressure onto the downside. But the concern you would have is these momentum indicators here, because you've got the RSI, which has again failed at 50, got downside potential, could easily go. I mean, back in April, it was back sort of below 30, sort of high 30s at the moment. There is downside potential there. You've got the MACD lines, which have crossed lower, the stochastics, which have crossed lower. This all sort of puts pressure onto the downside and maintains this sort of negative outlook for the dollar. So the pressure on that April low is growing, and a breach would sort of open, well, levels not seen since mid 2016 really, yeah, it's you're sort of looking at 107.50 being that reaction high that we saw in July 16, but really you'd be thinking of these fib retracements, I suppose, of 107.15, perhaps even back towards 105, 104 area. So it is a significant correction that we could see in this dollar yen chart, and further downside I think would certainly be seen if you breached that April low. So that is the key level that we're looking out for. So continued closing below 109 figure would put the pressure on. Now you've seen the market today, which is sort of consolidating to an extent. It's not really extending the downside, but you've got the hourly chart, which momentum indicators are negatively configured. 50 to 60 on the RSI. On the hourly seems to be a selling opportunity, and MACD lines and stochastics are sort of failing at lower levels, which again suggests selling into any sort of strength. 109 figure got as a pivot line here. Even on a near-term basis, 109 figure had been supported, became resistance. So it could be again a basis of resistance. So anything sort of towards 109 figure likely to fail. So I wish you good luck in your trading today, and I will speak to you later. Thank you.